Hello guys, in this video I'm going to teach you how I use my top-down analysis to trade synthetic pairs and synthetic indices on derivative. So first of all, I'll go to the higher time frame like I always say to map out my market shift or change of character. After I mapped out my change of character, I go straight to map out my break of structure, which I break it down as BOS. So after that, I go on to map my daily order block. You can call it a supply area. Ignore the mistake there. I'm already used to saying demand all the time. So you can just call it order block or the supply area or the block. Yeah, correct. The order block that lead to the break of structure on the higher time frame. So after mapping out my daily time frame order block, so after that I move to the lower time frame and refine my zones. But first I have to map out my liquidity to make sure there's a liquidity grab there, because if you can't spot the available liquidity, you might likely to get swept. So I've mapped out my available liquidity and the market have tapped into my daily time frame order block that lead to a break of structure. So what I have to do now is to map out the internal break of structure, which is on the lower time frame. The internal break of structure, lower time frame. So after mapping the internal break of structure, I'll have to wait for the market to pull back to the last supply area on the lower time frame that lead to the internal break of structure. So after mapping the lower time frame order block that lead to the break of structure, that's after the market has mitigated the daily time frame order block. So I will have to map out the lower time frame, because we can't just execute the market on the daily time frame. So we have to come to the lower time frame, which is a 4-hour or a 1-hour time frame, to refine our entry. So by doing so, we'll be able to catch a good trade. So what I'm doing now, I'm just mapping out the higher time frame low that would be our target. So this is more about like a swing trade, but it's not on forex, guys. This one is on synthetic. So I only need the 24-hour time frame, the 1-hour, and the 4-hour time frame. So as you can see, there's a long bearish engulfing candlestick there, so which is precisely my entry. So if I'm to take this trade, we have to wait for the market to go up and tap in the lower time frame order block, either the 4-hour order block or the 1-hour supply zone. So as you can see, the market has tapped into the 4-hour supply area and quickly pushed to the downside by giving us a long bearish engulfing candlestick. You don't need no indicator, you don't need no signal group. Top-down analysis is all you need to be profitable before the end of the year. Guys, as you can see, the trade hit a massive take profit, guys. So stay tuned for more video to be dropping soon. Top-down analysis is the best, it's the holy grail, and it will increase your win rate massively. So guys, stay tuned. Remember, you are just one trade away to be profitable funded trader who make millions every day. But first, guy, make sure you master this top-down analysis. I know what I'm saying. This top-down analysis will literally change your trading journey. So guys, have a nice week.